Welcome to the Recon Trader. In today's video, I will share with you some tactical analysis over on the Bitcoin charts as Bitcoin is currently pumping, and it does appear that the bulls, after several lackluster weeks, have finally decided to join the fight. However, you do need to proceed with caution as this could be a bull trap, and we will take a look at what that actually entails. But before we get too far into the weeds on the charts, I do want to jump over here and take a look at the options that will be expiring at the end of the week. Today is Monday, so on Friday we will have some options expiring, and I think it's important to take a look at what some of those key levels would be for Bitcoin as these options are set to expire at the end of the week. And so with Bitcoin currently trading over 43,000, this $42,000 strike price is a key level. If Bitcoin can close above this 42,000 strike price, it looks like the calls would be the winner this week for sure. There's 2.2 million stacked up at the 42,000 strike price. There's another 1.3 million stacked up here at the 41,000. And then if we look all the way back here to the 40,000 strike price, there's $3.5 million worth of calls stacked up here. So what does that all really mean? For me, what I see is there will be quite a defense put on at around 42,000. And then in theory, we should not see Bitcoin go below 40,000 if there's going to be any defense of these calls. And in reality, the puts or the bears don't really have much on the line this week. There's not a whole lot on the line for the puts. There's less than 400,000, where the calls actually have over 8 million on the line this week. So in theory, we should see bullish price action, and that's exactly what we're seeing. And that bullish price action could actually continue into next week, where we still see the calls have more at risk than the puts actually have on the line. But with that being said, while the rest of the month for February might be bullish, we could see some very bearish action come in March. As you can see, the monthly expiration date has a lot on the line for the puts and still has a good amount on the line for the calls, but the puts have a lot more on the line than the calls do for March, and that is why we could be experiencing a bull trap. And what a bull trap looks like is basically you see a bullish reversal actually goes above prior resistance, and eventually that trap snaps shut, and then you see a bearish reversal. Now, if you keep this in mind, we'll jump over to the Bitcoin chart, and we will be taking a look at the daily candles for Bitcoin. We have experienced that initial sell-off. We get the little bit of the bounce into resistance, only to roll over and sell off once again. Now we have what appears to be a bullish reversal, and right now we are coming up against that resistance level. And if the bulls can continue to push this price up, I would actually say stronger resistance is going to fall at 45.5, which was actually really strong previous support back in this area here. The bull trap might snap shut at this level, and then the bear reversal would begin. Now, it is possible that this 45.5 level is the resistance level that gets breached, only to then run into resistance up here around 50,000 before selling back off. And so that is why I would approach this current price action with some caution. Now, with that all being said, if I drop in the EMA ribbons, we do see some pretty good bullish price action. If you've been watching my videos, I have said ever since we broke down below the ribbons, we would be bearish, and until we got back above these ribbons, we should only expect bearish price action, which, as you can see, once we got below, we rejected multiple times from these ribbons, and the price of Bitcoin just continued to sell off. But now we may actually be seeing a reversal. But again, proceed with caution. If today's candle does close above these ribbons, that would be a good sign for the bulls. However, what you actually want to wait for is this lower green ribbon to also work its way above the red ribbon that is currently on top of these EMA ribbons. You want to essentially see this ribbon flip. You want to see the greens and the blues get on top of the yellows through the reds, much like what happened back here. Once we get that green ribbon, you see it way down here at the bottom. Once it gets back on the top, we see the price of Bitcoin explode towards the top side. That's what I would really be looking for, and that would perhaps then be confirmation that we're not setting up for a bull trap. And if we look even further back, you can see when we came out of the sell-off from the summer, the first time the price got above the ribbons, we still had the green ribbon on the bottom, and eventually we ran into resistance at this 120-day moving average, which is the orange and white line, and rejected back into the ribbons. But as you can see, the green ribbon from the EMAs actually got to the top, along with the price eventually getting above the 100-day moving average. And then we saw an initial push up. And even with this sell-off, the price did bounce off the 100-day moving average to continue its push towards all-time new highs. Now, eventually the price did roll over, it got below the ribbons, and then it did bounce in the range of the 100-day moving average, only to reject from the ribbons. You see the ribbon actually flips at that point, and the price crushes down through the 100-day moving average, and we've been selling off ever since. So with that all being said, we need to be very cautious as this price pushes up. We really want to see this price stay above the ribbons and eventually get above this 100-day moving average, which right now is in orange. And in theory, if Bitcoin can flip this ribbon, get above the 100-day moving average, we could then at that point be headed towards all-time new highs. But you always need to consider the flip side, and this could just be a fake out. So with that in mind, we'll drop in my support and resistance levels, and you can see right here this green bar running through the chart falls in line with around 42,000 to around the 40,600 level. And then as far as resistance goes, we see a little bit of resistance around the 46,000 level, which would be prior support back in this area. And then a little further up the line, we see quite a bit of resistance around 51,000 all the way up to, say, 53,000. That would be this zone in red that we see on the chart here. So, I think that's enough jaw-jacking for this video. If anything major changes on these charts, I will do an update video, so now would be a good time to shoot that subscribe button. If you like this video, do me a favor, spike a like. If you have any questions or comments, drop them in the comment section down below. And remember, never send your money into battle without first doing your recon. See you in the next video.